have to admit that when I started off my research this morning and saw the PPI numbers, I thought I was dreaming. The numbers were so out of whack and so crazy compared to all the other data with regard to inflation that I thought maybe there had been some sabotage at the BLS because of Trump firing their leader. I mean, seriously, I looked at the numbers like three times because they were so crazy. I couldn't even grasp the idea. I have to admit this was very early, but anyway, a little digging in shows that, well, spoiler alert, there's some items on the list that are so crazy that they should have gone back and double checked. CNBC and others even reported that the PPI this time is maybe a nothing burger, and the stock market seems to agree. So far, anyway, we're seeing not a tremendous reaction to these numbers. Even the betting on the Fed reduction in interest rates is still strong. So everybody seems to agree with my position on this. Anyway, we'll see. I'll talk to you about in way more detail when we get down to that here in a minute. Elon Musk said this today. He says, if they, meaning the shorts, don't exit their short positions before Tesla reaches autonomy at scale, they will be obliterated. I like that one. Tip Ranks had this from Guggenheim's Ronald Jusikow. Reuters, with a balanced, even favorable place on. I'm sorry. What happened here? Something got out of order here. Must have been because I was so thrown off. Oh goodness. Yeah. Things are really messed up. I'm so sorry. All right, let's go back. Let's go back and do the Reuters story, and I'm sure I'll find the Tip Rank story somewhere later. Reuters has a balanced, you might even say a favorable piece on Tesla. After Forbes doing that the other day, it's kind of shocking. Um, what is going on in the first half of this year as Tesla sales plunged by half or more in Germany, Sweden, Denmark, and the Netherlands, but they grew by 24% year on year in Norway, making this country of 5.5 million the company's second largest European market. Tesla and Musk did not respond to Reuters. Reuters interviews with Norwegian Tesla owners as well as EV industry experts highlights a 12-year relationship between the Nordic nation and the car maker that, despite recent signs of strain, has bred brand loyalty and insulated against blowback. In many ways, you could say that Norway helped build Tesla, said Christina Bø, Secretary General of the Norwegian EV Association. Everybody in Norway knows someone who owns a Tesla, she said. It's more personal. Research from polling agency Northstar, published in February, showed that 40% of Norway's Tesla owners believe Musk's political activism is hurting the brand, though more than half of Tesla owners polled said they intended to buy another Tesla. Odd Becken, Odd, that's his name, Odd. I know a story, I know a joke about a guy named Odd. I can't tell, it's too long to tell right now. Odd Becken, a Tesla owner since 2014 who once admired Musk as a visionary, won't be one of them. Driving the Model S from Oslo to his home in southern town of Ski, he told Reuters he still loves the technology. Tesla was the first electric car that was actually a good car, said Becken, who at one point sat on the board of the Norwegian Tesla Owners Club. It was a two-way relationship, with Tesla posting pictures on its social media of Becken's Model S back in 2014. But after Musk moved to back Trump derangement syndrome, and rally behind political movements like Germany's far-right Alternative for Germany, which is now the number one party in Germany by total, the last poll. He decided Norwegians needed to show their displeasure via their pocketbook and convince the company to push him out, push Elon out. Oh boy. To save Tesla, we need to boycott Tesla, he said. That doesn't mean he wouldn't buy a secondhand model, though, because the company doesn't benefit from us buying used cars. Odd said. That was an odd story. By the way, of course, Tesla benefits from people buying the used cars. not directly, but indirectly. The Street had an article that I will spare you the details, but there was this one interesting tidbit. Yet more recent data, which tracks registrations across all 50 states, shows that the Tesla loyalty rate bottomed in March, which was just 49% of Tesla owners looking for another Tesla, but that number ticked back up to 57.4% in May. So there you go. We've had this rebound. Maybe it'll keep on rebounding higher and higher. Musk also revealed that the next generation FSD model, version 14, boasting 10x more parameters, is expected. Here comes the article from the guy from TipRanks. Okay, what the guy says is this. He says, Musk revealed that the next generation FSD model, version 14, boasting 10 times more parameters, is expected to debut in about 6 weeks. Initially, it will be rolled out to early access FSD community, but its progress within the Tesla employee fleet and the robotaxi network is encouraging. For consumers, the update should reduce how often the FSD system nags, thank goodness, and Musk hinted at numerous additional improvements beyond the parameter boost, although he said he hasn't shared the specifics. He says, for the uninitiated, and I thought this was really good here, he says 10x parameters refers to the number of variables that FSD models use to learn from data. These variables adjust to make predictions more accurate. In Tesla's neural network, parameters act as influences on the neurons. For the robotaxi system and FSD overall, a higher number of parameters allows the model to learn more complex patterns, behaviors, and tasks, and therefore improve training. Perhaps more importantly for investors bullish on Tesla for the fleet of potential FSD-enabled vehicles today, 𝐓𝐡𝐮𝐲 said the 10x higher parameter count will be able to run on the current generation of FSD hardware and interface compute. So maybe we folks that have hardware 3 will get the benefit of this one. Maybe. That's very, very encouraging. He's also a bear with a 175 price target, but he's also in the lowest 20% quartile of TipRanks and has a 1-star rating out of 5. I thought his explanation was good. Apparently, his ability to judge stocks, not so much. AJ had a update this morning. Remember, he can be found at 𝐓𝐡𝐻𝐿𝐿. He says, number one, the stock is up 8.9% this week. That was before this morning. It is down a little bit this morning. Strong overall market that's helping. Trump's attempts to mend relationships with Elon helping. Elon's Grok 5 announcement before year end. Grok 5 is relevant for Tesla since there is a strong read over and across in terms of AI leadership among investors. He says it's slightly worrying that last week's rally was on relatively low volume by Tesla norms. He says Monday's strong performance was driven by an interview Vance gave in which he echoed Trump's messaging, but Vance was more direct than Trump, easing investors' political risk concerns with regard to Elon. And Elon also sent some positive signals in the direction of the White House. So that's what AJ is thinking about this morning. This is Randy Kirk. Hit like, subscribe, notify, and send money to Patreon. Somebody yesterday, I didn't jot down the name, somebody sent a $25 extra shot here on YouTube. That's another way that you can help out the channel. Thank you very much for that. That was a healthy tip. Thank you very, very much. I'm crazy not to have written down your name, but maybe I'll take care of that later today. Market Watch had this morning from David Rosenberg. Now listen to this. I want you to listen carefully to this. Finally, someone's telling the story. And I think this is one potential fly in the Trump ointment. I think Trump is doing everything right, but this is something that isn't, as it implied, not by anything Trump is doing wrong, by the overall impact of everything that it may shake up what we're all hoping for. Last year, Rosenberg points out, population growth slowed to a 3-year low of 0.6% and an even slower 0.5% for the 25 to 55-year-old prime working age bracket. Meanwhile, the 65 and over bracket has grown from 15% of the population to 19% and is set to rise to 30% of the population. Now, listen. The thing is, aging populations don't spend, they save, he says, pointing out that the marginal propensity to spend falls from 94 cents on the dollar at age 35 to 67 cents at age 65. Remove the young consumers, accelerate aging, and consumption patterns collapse. This is certainly not on the minds of today's investor base, which is busy bidding forward PE multiples back up into the cycle peak. Restrictions on immigration, as well as near record low birth rates and fertility rates, will lock in these demographics. He sees Japan, where immigration was just 2% of the population, as the parallel. Was the result in Japan inflationary? Heck no, hardly. More like chronic deflation. Negative policy rates and a debt trap, a mountain of public debt, which is a massive future claim on the private sector income streams, is deflationary, and it hits extremes, as is in the case, he thinks it will be the case in the U.S. Japan, several decades ago, went through this, and their housing prices went in half, and their economy just completely flatlined. Granted, AI and robotics, he says, this guy is so on point. Granted, AI and robotics will help alleviate the labor crunch, but the thing is, while proliferating technology is labor-saving, machines don't earn money and they don't spend money. And the GDP is, after all, only about spending, he says. Rosenberg lists these investment implications. He says you should short real estate, go long on bonds, avoid all commodities that don't have a tie to AI, and go long gold as a hedge against both the bottlenecks from inflation and the financial instability from deflation. Dollar stores and other discount retailers will benefit, as will consumer staples with pricing power. Healthcare and utilities will also benefit, while a credit contraction will savage bank earnings. There you go. The producer price index. Okay, now if this is really, really critical. Again, the markets have shown you how this was an outlier, but let's talk about it for a minute. The producer price index for final services rose 0.9% in July, seasonally adjusted. The U.S. Bureau of Labor Statistics reported today. Final demand prices were unchanged in June. Last month. Zero change, but went up 0.9%. And they went up 0.4% in May. So they're all over the place. On an adjusted basis, the index for final demand was 3.3% for the 12 months ending in July. That's the largest increase. It's like crazy. It was 3.4 in February, but it came down, and then now it's back up to 3.3. But we'll talk about the outliers. The index for final demand, less food, energy, and trade services, moved up 0.6% in July. Crazy number. This is why I just was like, am I still asleep? The largest increase since rising 0.9% in March of 22. For the 12 months ended in July, the price for final demand was up 2.8%. Final demand services. The index for final demand services moved up 1.1% in July, the largest advance since rising 1.3% in March of 2022. Over half of the broad-based July increase, listen, over half of the broad-based July increase is attributable to margins for final demand trade services, which jumped 2%. Trade indices measure changes in margins received by wholesalers and retailers. We'll tell you more about that in a minute, but that's half of the increase in services. Prices is for final demand services, less trade, transportation, and warehousing, and for final demand transportation and warehousing services advanced by 0.7% and 1%, respectively. Product detail. 30% of the July rise, 30% of the July rise in prices for final demand services can be traced to margins for machinery and equipment wholesaling. 30% for machinery and equipment wholesaling, which jumped 3.8%. 3.8%. The indices for portfolio management, service, securities brokerage, dealing, investment advice, and related services also jumped up like crazy. The indices for furniture retailing and for pipeline transportation of energy products declined. There you go. You got one decliner. Final demand goods. Prices for final demand goods moved up 0.7% in July, the largest advance since January. Now listen to this. 40% of this broad-based increase in July can be attributed to the index for final demand foods, which jumped 1.4%, and prices for final demand goods less foods and energy and final demand energy moved up 0.4%. A quarter of the July advance in the index for final demand goods can be traced to prices for fresh and dry vegetables. Fresh and dry vegetables, which jumped 38.9%. And that contributed a quarter of the entire part of the goods demand. 38.9% these things jumped. Are you ready for that? Something is wrong in Denmark. Oh, no, that was Norway. Anyway, though it was right in Norway. CNBC points out that portfolio management and airfare were outliers. Bloomberg says this: U.S. wholesale inflation accelerated in July by the most in 3 years, boosted by a surge in margins. Now listen to that, a surge in margins. So companies were taking more margins. And that indicates that companies are not absorbing higher import costs related to tariffs. That was their conclusion. The producer price index increased by 0.9% from a month earlier after no change in June. The measure rose 3.3% from a year ago. Oh my gosh. The fact that PPI was stronger than, now here's a quote though. Remember, the margins are increasing, and that's because of tariffs. Now keep that in mind. And here's a quote from Clark Garanen at CalBay Investments. The fact that PPI was stronger than expected and CPI has been relatively soft suggests that businesses are eating much of the tariff costs instead of passing them through to the consumer. Get two economists in a room, you'll get three opinions. The market is paying attention to the number, but it's not paying much attention to the number. So the market's down a little bit, but not much. And I think that everybody looks at this and they realize there's something completely wrong here. In the week ending August 9th, the advance figure for seasonally adjusted initial claims was only 224,000, a decrease of 3,000, and pretty much right in the middle of what it's been for the whole time I've been reporting. The previous week's level was revised up by 1,000, so not much of a revision. The 4-week moving average was 221,000, an increase of 750. And the previous week's average was revised up by 250, so not much of a revision. The advanced seasonally adjusted insured unemployment rate was 1.3, exactly the same as it was the week before. The total number of continued weeks declined for benefits for all program. It came down. It was a decrease of 4,357 out of the 2,000,006 that is there. So a decline, and that has been the thing that's been going up, and that is now declining. That's, of course, an indication that people are finding it a little easier to find a new job right now. Not much, but a little. Trump came in at 48% this morning after being 49% yesterday. So for the last week, been ranging 47, 48, 49, has not been at 50 or above for a couple of weeks. Truflation this morning at 1.99 on the overnights, 1.97 on year over year, but the PCE ticked up to 2.61. So that is interesting. I hate it when truflation jumps around so much from like 2.25 to 2.61. And remember the Atlanta Fed, which will report tomorrow. I probably won't tell you about it till Saturday morning because it's late in the day, but is still sitting, of course, at 2.5 in terms of the GDP going up at that rate. All right, so there you have the wild and woolly day in terms of the economic numbers. And what is the impact right now on the stocks? Well, Tesla is almost back in the green at 339.01, only down by 0.07%. So very, very close to being in the green. The NASDAQ also has now ticked into the green, up 0.8. In fact, Tesla just went to 000, and that, of course, is a positive number. You've got the Dow Jones almost back in the green, just down 0.20. You've got S&P down 0.02. So everybody about the same, just about flat for the day. As I mentioned, really looking at those PPI numbers and saying, not that critical. I have a feeling Tesla will be back in the green nicely later today. You've got the Magnificent Seven now all 100% up, except for Apple and barely Tesla. All right, you've got the Cathie Wood stocks now. A couple of them are up, but the rest are still down. The bond market has taken it a little harder than the stock market. We'll look at that right now. And there was something just going across on my screen. I want to go check it out here real quick. I know it'll take me just a second to see what that was. Let's find out what that was here. I'm sorry to take so much time, but it might have been important and you'd want to know about it. And the answer is that X now has 1,200 employees. Okay, that's down 8,400 from when Elon first acquired Twitter. That is slightly interesting, but maybe not worth your time. I'm not sure. Okay, let's go back to the bonds. Check them out here. We've got the bonds now up. Yep, 2.7 basis points, back up to 4.267. Again, you got to expect some reaction to the bonds, and that's not horrible in terms of reaction. You've got the oil prices up a little bit, 65 cents to 63.31. You've got natural gas down 1% to $2.80. You've got gold down 0.45. Down to 33.92, so under 3,400. Silver down 1.16% to $38.16. Copper down 0.64 at $4.46, still pretty much in the same range. The dollar mixed, and Bitcoin taking it the hardest this morning. Maybe I would call this probably profit taking, down 2.71 or 3,298. Back under 120,000 at 119,215. All right. So one of the big pieces of news that maybe you've heard, maybe you're paying attention to, is that Perplexity has put in a bid for Chrome. Since Google needs to maybe break themselves up a little bit, a lot of people have talked about Chrome being the thing that might go away from the Google ecosystem, and Chrome and Perplexity is trying to push that their way by grabbing that product. All right, what do we got? We got later today, as far as I know, everything will be fairly normal with Bradford Ferguson on at around 5 o'clock, 5:15, something like that, California time, and then later at 7:45, probably Cern Basher, although that could change because the Cern Basher one is flexible, and so you never know who I might throw in at the last minute because of breaking news. And then last night, you definitely want to go back and watch Cern Basher. Actually, let's see. Yeah, Cern Basher, or should you go back and watch Larry Goldberg? That's a tough talk. I'll put both of them up because if you got the time, you should probably watch both of them. All right, so what else? Let's go back real quick and look at whether Tesla has made it into the green. It has. It's up 2.26% at 340.11. On that piece of good news, I will bid you adieu. It's been great talking to you.